There's been a big growth in non-traded healthcare REITs these days. Several of them have been, I don't want to say dominating the acquisition market, but have been very active acquirers in seniors housing and care. And I'm here with one of them today, Todd Jensen. He's the Chief Investment Officer of American Realty Healthcare Trust. And you all have been growing very, very quickly. You've not been in the seniors housing space for that long, but you've made a big splash. Since you've been investing, what's the total dollar amount you've put into the senior housing and care side of the business?
We currently own about $420 million of senior housing assets.
And you also own MOBs and
other outpatient facilities and even some select post-acute care facilities, long-term acute care hospitals, inpatient hospitals.
And how are you finding the properties and portfolios that you're buying?
Well, we like to network directly with owner-operators of these properties, developers. We've also gone to great lengths to develop relationships in the brokerage community. And it certainly helps when brokers see you successfully transacting. That elevates you in their mind in terms of prospect for the next opportunity.
Sure, they see you doing deals, and they know you got the money, right?
Right.
And is ARC, you focusing more on assisted living with memory care, Alzheimer's, independent living, and assisted? I mean, what's the kind of unit mix that you're focusing on, if anything?
Right. Most of what we own right now is a combination of assisted living and memory care. We would do and have interest in CCRCs, particularly rental model CCRCs. We look selectively at skilled nursing properties. We don't acquire many, but we do look selectively at them. And the one property type we're probably most cautious about is freestanding independent living in terms of IL, AL, or memory care. So it's unlikely that we would buy a community that was only independent living.
Gotcha. And are you focused geographically anywhere, or in your current hyper growth, you're looking all over the country?
Yes, we'd like to be geographically diverse and balanced. At the moment, most of our senior housing properties are in the Southeast and the Pacific Northwest. And we're looking to expand in other regions, including the Midwest and the Southwest.
And how about with the acquisitions? Are most of the deals you're doing, are they sale leasebacks, or on the sale leaseback deals, are you looking at where the owner is selling and then leasing it back from you, or are you doing a lot of third-party deals where the seller is out and either a new manager comes in, or
both?
Does it matter?
It doesn't matter to us, no. Most of the transactions that we've done to date have been RIDEA, where it would be a owner, operator selling and managing back for us, but we're equally as interested in sale leasebacks or third-party sales where we could have a third-party operator or bring a third-party operator.
Yeah, and I think you've done several RIDEA transactions. Is that something that you think you'll be growing as opposed to what historically has been the more traditional REIT, the sale leaseback type transaction?
Yeah, we'd like to grow in both regards. We expect to do more RIDEA transactions, and we'd also like to do more lease transactions.
And I've recently, and especially very recently, you're doing some mid-sized portfolio deals. Is that your sweet spot? Is that what you're kind of looking for the growth?
Well,
as opposed to one-off transactions.
We do both, and again, we would be interested in doing large transactions. Sometimes the largest transactions get priced at a yield such that they may not make sense for us. So we find that we get more yield in smaller mid-sized portfolios, or even better yield in single asset transactions.
You mentioned that you have done some skilled nursing, but that's not going to be a major focus?
Right. We have two properties really that are licensed as skilled nursing, even though they don't operate as traditional skilled nursing facilities. We do have a couple properties under contract that are traditional skilled nursing facilities, so I think we will make some investments in that. It's not ever going to be an area where we allocate a lot of our capital, but we do look selectively at that property type.
I mean, I would think, just given how competitive in the private pay senior housing acquisition market, and you said that, yes, it's got, sometimes the portfolio deals are too expensive, cap rate's too low, doesn't make sense with your cost of capital.
Right.
Wouldn't the skilled nursing side with the higher cap rates relative to your cost of capital, isn't there more wiggle room, or you have to?
Yeah, well, that's one of the more appealing attributes of that property type is the yield that you can get.
Yeah, yeah. Because I mean, to me, that would be very very productive. You know, obviously 2013 was your best year since you're relatively new. How much do you think you'll have put into the business by the end of the year?
Well, we've invested $1 billion year to date across all the different healthcare property types. Year to date this year, we've probably invested $300 to $350 million in senior housing, and would still expect to add another $100 million to that before the end of the calendar year.
And how about 2014? What do you think?
I think we could invest as much as $700 million in senior housing in 2014.
That's gonna. I mean, that number's gonna take you up. You know, forget the big three, but I mean, that's gonna kind of put you up there. That's. I mean, has that been the goal to kind of get the growth going that quickly? And
yeah, you know, our company is in the business of, you know, raising what we would call blind pool capital through the, you know, as a non-traded REIT. We raise our capital really through the retail independent broker-dealer channel. And one blessing that we have is our company is very proficient at raising capital. So across all of our platform, American Realty Capital will probably raise $14 billion of equity in 2013. So we expect...
How much?
$14 billion probably of equity across all of its different REITs, not just the healthcare REIT. So, you know, we've started raising our second healthcare REIT and expect to raise $1.7 billion of equity in that REIT, and most of that money would likely be raised in 2014. So we'll have all that money to invest plus $700 million of debt capacity that we have still in healthcare REIT 1.
So you hiring more staff to invest all this money?
So, perhaps selectively, yes. So we have we've done a great job so far with a small team, and continue to make progress. So, but
boy,
we'll add as we need to.
If you keep on adding like that and raising that equity, you're obviously going to be doing a lot of deals. Well, that's great. Good luck for next year, and wish you continued success.
Well, thank you.
Okay.
Appreciate it.
Nice sitting down.